Oh my
Here's
God.
what I want to do, Thomas.
Yeah.
I've got 3 topics for you. I haven't necessarily gone through them with you because I want your raw, unfiltered.
You're going to get unfiltered. I promise you.
Okay. First one I thought would be a fun exercise. After you get a FOMC, you tend to get FOMC reaction videos, and I would like to make Tasty Live's very own FOMC reaction with Tom Sosnoff. First, I want to set up what was said yesterday in the FOMC announcement for you, if you don't mind. I'll simplify it. I don't want to be too detailed and bore people to sleep. The point was, yesterday, Jerome Powell and the Federal Reserve in their SEP, or Summary of Economic Projections, which is something they put out, which is effectively the Fed's forecast for where we're going to be in terms of GDP growth as an economy, what unemployment might look like for the next 3 years, and in the long run, what inflation is going to look like in their personal opinion for the year and in the long run, next 3 years in the long run, and what Fed funds rates they are projecting out for the next couple of years. So in yesterday's Summary of Economic Projections, in December, so they put this out, the last one they put out in December, they had GDP growth of 1.4%. Yesterday, they raised their target in 2024 to 2.1%. Not a big surprise. The economy's been running much higher or hotter than 1.4% for the year. So in a lot of ways, that's truing up to where we are today. Unemployment rate, they effectively dropped from 4.1 to 4%, basically the same. PCE, or inflation, that's the Fed's preferred inflation measure, was kept at 2.4%, and the core PCE inflation, ex-shelter and energy, was moved up to from 2.4 to 2.6%. So the summary here is the Fed raised their growth projections, they raised their inflation projections, which is the opposite of what they're fighting, and they kept their anticipated Fed funds rate for the end of the year at 4.6%, which is still around 3 cuts. So some were a bit surprised that they might raise growth, raise inflation, but then still say we're going to cut 3 times, even though the economy is going to grow above trend and inflation is going to grow hotter than our target. But it was effectively a bit of a yawner in terms of volatility. Ball got crushed. Stocks led a little bit higher, obviously, and we're seeing some follow through here today. So that's the setup. Tom, what is your reaction to the FOMC announcement yesterday?
I just listened to everything you just said for the last 5 minutes, and all I heard was like I don't think one thing you just said. It was almost like, I'm sure you've never been lectured by your spouse or anything, but I've been lectured many times over the last couple of decades. And like, I don't hear anything. You know what I mean? Like, I'm a really bad listener. And so like she'll be talking to me and I don't really hear one thing she says. Like, it all goes in one ear and out the other. And I don't really hear a thing. People have told me that I have a issue, which I probably do. And everything you just said, I felt like I was in that same situation. Like, none of that registers with me, not even for 1 second. Like, I think what Powell was trying to say, or what he said, maybe he's really good at what he does, because he must be, because the market's at an all-time high and everybody seems to be happy. And interest rates are decent, inflation's decent. Every if you need to make some money on your money, you can do that now. If you need a little bit of inflation because you want asset prices higher, you got that now. If you are invested in the stock market, you got that now. Your 401k's got that now. You got everything. It's the perfect, it's the perfect world, I guess. But the whole thing with the Fed announcement yesterday is that, like, the Fed is, and this is something that I've been trying to stress to everybody at Tasty and all of Tasty Nation for a long time. If the Fed does their job, they are like a great waiter in a really nice restaurant. You don't even know they're there. Like, they don't really need to talk to you except every once in a while. They just do their job. They're total pros. The one thing I'll say about Jay Powell and the way he operates, he's not a drama queen. And what he does is he's just like a great waiter. He's basically telling you everything that the market is already delivering. Like if you noticed yesterday, the bonds, they really didn't move. I mean, the first thing they did was they went up a couple ticks, then they went down.
Rally, they sold off.
They sold off, and then they rallied up a little, and then this morning they rallied up, and now actually bonds are almost unchanged, and notes are actually down in the day. And so the Fed should have the most influence over the bond market, and essentially they've had zero. And what the stock market cares about is just that the bond market doesn't mess up what they've got going on. Like that's the only reason the stock market cares about the Fed and cares about the bond market, is just because they don't want either one of those two to spoil their parade. So from Jay Powell's perspective, or the market's perspective on Jay Powell, all they do is they say, you know what, he does a really good job of telling us what we already know, but for some reason people need to hear it. Like, and I don't understand that either, because the marketplace already told you, like, they had bonds trading exactly where they should be, and they had essentially everything priced perfectly, except the stock market was like, oh, this is nice. Here's something else we don't have to worry about. Like, this guy didn't mess it up. And I think one of the takeaways from this is you're learning that to be a really good Fed governor, you have to actually learn to tell the story of what the market is telling us, more so than what more so than some story you want to tell about the future. Because that's the only thing that you can actually validate. So what he's become very good at is telling a story that the market can validate and nobody can argue with, and therefore he's quote good, which is fine. Doesn't mean anything. It's fine.
So if Tom Sosnoff is running for election in 2024 and he miraculously wins he defeats the odds, he runs as independent, and he's here to liberate this country, would he reappoint Jerome Powell?
If you have to have somebody to run the Fed, like I would argue the Fed could be automated to be run by AI. Pretty much it's the same thing. But if you had to have somebody to run the Fed, the answer is yes. Like, the interesting thing is that if Biden wins, it's a layup for him, because he has the market at record highs. There's absolutely no reason to even consider changing, because that would just disrupt the markets. The devil is always better than something else. So if Biden wins, it's a layup. If Trump wins, he has to send a mess. He will, because that's just the way he is.
He's already said he won't reappoint.
Of course. But that to me is essentially a badge of honor for Powell. like the best thing that can happen to Powell is he goes out on top and he gets fired by Trump, who replaces him, because he's leaving with everything at record highs. Like, there's nothing like that. Is, that's essentially Jerry Krause trading away Michael Jordan because he thinks his career's over. That's the same thing. Like,
in fairness, Tom, it's still March, right?
I understand
a long ways
that.
To go.
I understand, but we can't talk about what the future. We can only talk about what we know today.
Sure.
So I would consider, if Trump wins and he fires Powell, I would consider that a badge of honor for Powell. If Biden wins, he keeps Powell. So it's either way, he can't really lose. Like, at this point, he has navigated through a drop. He's navigated through a rise in interest rates and a rise in inflation incredibly effectively, because he's let the marketplace tell the story, and he hasn't tried to add a lot of drama to it. And I'll just leave it there.
With the exception of 2022, when he lifted off much faster than everybody expected.
Okay, that's fair.
Or 21, 22. All right, I got another two topics. They're a little bit more fun, a little bit less serious. So I don't know if you saw the interview that Alex Karp gave on CNBC the other week. It was hilarious. It sort of went viral. In it, he made references to short sellers, and I don't know, and narcotics. I don't know if you mind if I say this, but I'm quoting him for any kids, earmuffs out there. He said, short sellers love pulling down great American companies to pay for their cocaine. Later in the interview, he said, Almost nothing makes a human happier than taking lines of cocaine away from these short sellers. So I kind of wanted to get your reaction.
Did he
make you
just
laugh here this morning?
Was he watching Wolf of Wall Street or something? Like, like what was going on? I mean, was he just did he just finish?
Definitely seemed. He seemed to be subtweeting somebody. So on Twitter, if you talk about somebody but you don't at them, it's called subtweeting. And it seems like maybe he was speaking to maybe a person directly. I don't know who, but maybe he was subbing somebody out there. My question to you is your reaction to that quote, but more importantly, sometimes we get in this world of good and evil, good guys, bad guys. We don't live in a world of nuance or where both sides of an issue are needed, necessary, and moral good actors. There is a good guy and a bad guy in most of our very comic book narratives. So my question to you is, if there's a new participant in the marketplace, should they see short sellers as evil actors in the market or a necessary participant serving a useful function?
Oh my God! I mean, you're asking the question to somebody that has been trading from the short side, and long side. But I mean, obviously, I sell short all the time. I mean, you're talking.
So is he right? So then, is he right? Is Alex Karp right?
Well, I don't have lines of coke on my desk right now, so I don't think he's right. But like I feel like if you go to a craps table and you bet on the don't, okay, and there's a whole table full of people and you bet the don't, okay, then you're anti-American. All right, like to me, the worst thing you can do is go walk up to a craps table where everybody's and then root for everybody to lose. Like, I hate that. Like, that bothers me. But in the world of trading, I don't understand how it's any different than, let's say there's a game tonight. I don't know, two teams in the NCAA start today, right? And you like Michigan and I like Illinois. Okay, they're not playing each other, but whatever. And I don't think the fact that I bet on Illinois and you bet on Michigan makes you a bad person, because you live in Chicago, but you bet on Michigan. You know what I mean? So in the world, I consider betting on one person betting on one team and another person betting on another team is very similar to betting on a stock going up or down. And I feel like, in the world of trading, short sellers and people that trade from the short side, I mean, are really the reason that there's buyers on the way down, and they're really the reason that you can make the argument some stocks go crazy to the upside because short sellers get caught. I don't know how you can blame what happened to Peloton on short sellers. Like, I just don't understand it. I mean, at some point, I don't even understand how that's the excuse. Like, why don't you just look in the mirror and say, hey, you know what? We screwed up.
No, this guy's Palantir CEO.
Oh, Palantir. Okay, I'm sorry, Palantir.
He's Palantir CEO. Yeah.
Palantir. I misunderstood. Sure.
So, I think Scott Sheridan said something to me one time that stuck in my head about this topic. He said, very few people prefer the vulture over the eagle, but the vulture rids the environment of carcass and disease. In other words, they're necessary. And I thought that was one of the cleanest ways of describing the function that short sellers can play in the market. Not only as a liquidity buffer on both sides, but the fact that they're the ones that find your corruption, they're the ones that find your fraud, and they're the ones that monetize it. And because there's a gigantic incentive to sniff those things out in the marketplace, you can sort of have a greater sense of trust in the market.
Don't you love, though, when you're like don't you love when somebody fades you? Like I love, like,
especially you.
I love it. Like, that was one of my favorite things, like always throughout the years about going back and like, because the closest comparison I have is to thinking about like guys like Jordan and their career, and when somebody would say like I shut you down, and then he'd have 40 in the second half, or how come you only scored 22 points off this guy, he's a stiff, and the next game he goes out and gets 0, you get 60, like the motivation you get from somebody that wants to short you, or from somebody that doesn't think you're any good. And I mean, I always go back to the story when we built Thinkorswim, and the first person that wrote an article on us was a woman from Crane, Chicago, and she said basically the first line of the article is, dumbest name I've ever heard, chances of this company surviving is basically 0. And then like 10 years later, she wanted to do a story with me, and I'm like, I never forgot that story that she wrote about us 10 years ago. She goes, oh, I was hoping you forgot about that. And I'm like, no, I never forgot. Like I'm
guessing I know the journalist.
It's well, I don't even remember what her name was at this point. Yeah. But I guess my point is like companies should get motivation from short sellers. Companies should, I don't say they have to appreciate it, but they have to respect that there is, this is a two-sided market. I think that's one of the most, if that was the CEO of a company that I was invested in, I would sell my stock. Like if that interview is and he wasn't just tongue in cheek and whatever it is, I would sell my stock, because this guy is far too stupid to be a CEO.
Oh Jesus! Why do you have? He was so good, and then you had to just run that car off the road. This guy's selling AI profiling of all of us to governments all around the world. This is the bear that you want to poke. I would warn you.
I don't care. I'm not.
Nice. You play nice with Palantir if you want a future. When we're all living in huts. Okay, the last item I got for you is Bitcoin options. So BlackRock's Bitcoin ETF, say that 10 times fast, had until March 10th to make a decision to action a request from the NASDAQ to list options on IBIT. They've delayed that decision till April 24th. My question to you, my friend, is how important do you think, if you could write a comment letter to the SEC, what would Tom Sosnoff's comment letter to the SEC about whether or not they should list IBIT options, what would that look like?
Well, I mean, first of all, it doesn't make any sense to me why they wouldn't. Like I don't understand. Like I don't understand it. It must have something to do with some form of settlement is all I can think of. But I really don't know why they wouldn't list. Like there must be something here. It must have to do with either settlement, which I don't even understand why that's an issue with an ETF, or because it will settle into the ETF, or it has to do with an overriding issue that the SEC has with Bitcoin derivatives to start with. And I'm sure that's probably it. And I have been at odds with the SEC over a lot of things, and Bitcoin derivatives is just in that list. If you think about it right now, and this is the unfortunate, there's always unfortunate consequences. The unfortunate consequences are there's a lot of people that want to trade. This is how I would approach the SEC. And I would say, listen, what you're doing is you're basically forcing people that want to trade Bitcoin options into dark alleys, because right now you have to go to SMCI where the markets are $20 wide, okay, which is untradeable to trade options on Bitcoin at an implied volatility rate that's 50% higher than the underlying Bitcoin itself.
You mean MSTR? MSTR? Is that what you're talking about?
Oh, I'm sorry, MSTR. I meant MSTR. I said SMCI. I got SMCI in my mind, but MSTR. And so MSTR is trading at about 135 vol. Bitcoin's trading about 85 vol. And so you're basically, pushing people into, and MSTR is essentially untradeable, right? So you're pushing people into an untradeable underlying to trade options. That's number one, with a ridiculously high implied volatility that's out of whack because of short sellers and everybody else trying to figure out, what the premium should be. The other option for trading Bitcoin options is to move into the futures options, which the minimum size is 5 Bitcoins. So right now, let's say it's a $350,000 contract. It's a ridiculous notional value. So what the SEC is doing by not approving Bitcoin options on the ETFs, which are a very reasonable ETF underlying, is pushing people into products that they should never be trading if they want to trade options. So the impact that it's having on customers, and their job is to protect and help customers, right? That's the job. Make the markets fair for customers. And so what they're doing is the exact opposite. So it's very disingenuous, the whole idea of what's happening with customers and options on digital assets. Or the other thing is they're pushing them to an OTC marketplace somewhere else in the world that's hosted in Bermuda or, the Bahamas or, in Estonia, wherever it might be. And they're trading on, on unregistered or non-registered exchanges, and with crazy wide markets, and the counterparty is the exchange itself. So the SEC is really doing a disservice to individual investors, and the simplest response to that is, okay, just make the markets free. I mean, just free up the markets by allowing for, and so that's how I would approach it. You're not going to be able to win an argument which says, hey, we need these derivatives because I say we need them, or because I want to reduce my basis on the underlying, okay, or I want to hedge my risk. All those are reasonable, but I don't think that works. I think you say, listen, because you're pushing people into products that they shouldn't be trading, because they're looking for derivatives, that's the problem.
We have until April 24th, or another month. There are methods in which they could kick this down the can or delay it again. But right now, you've got another month to look out for their final decision here.
Yes.
It was an absolute pleasure.
And just so you know, writing letters, comment letters, and feedback to the SEC, I mean, I would like to know the first person where that actually works.
I am such a nerd that on big changes like this, I go in and I read those comment letters, my friend.
I know you read them, but that's a big difference between reading them and the person who writes them, and having the person that writes them actually having them implement any of those changes or having it affect change. That's the challenge.
By the way, when they open up these windows for comment letters, anybody can write. If you're a retail trader and you want to see these IBIT options listed, and I think that's a cool function.
That's fair. Anyone can write. All right. Thanks, Vic.
Thank you. Peace, everybody.
That was good. We're going to take a very short break, and we are going to come back.